So I know other folks, other CEOs in this forum have thought about a SPAC. Um, Talk about it. What dynamic is in the market right now for SPAC?
Well, I mean, that's the problem with SPACs, especially in a market which is challenged like this, is that they have a redemption feature. So, when you vote for the actual transaction, you can, if you have a strange situation where people will vote yes to the transaction, but say, I want my money back. So what you'll see is that the actual money you get from the SPAC is de minimis. You actually have to go and raise it via the pipe, so privately. And so I've always said there's nothing intrinsically wrong with SPACs. They just need to be structured in the right way. When you actually raise the money initially, you wanted to actually raise that from investors who are interested in the potential target. In most cases, that has not been the case. You've basically raised the money from hedge funds who are going to redeem, and they just get value from trading the warrant that was associated with the original SPAC IPO. They have no interest in the underlying target. They'll ask for their money back. So essentially what you'll get is you'll get a public market listing, but not really get the benefit of that, because what you'll get is the obligations of being a public company, but you won't get the capital because it'll be redeemed. You won't get research coverage. So that has been part of the issue with SPACs. They've not been properly structured. They've not had the right investor base. So companies have not been able to essentially enter the market with having a public market investor base, access to follow-on capital, research for support from the investment banks. So they've had the worst of being a public company without the benefit of being a public company. When they've actually tried to raise follow-on capital, they've had to do, if they've been able to, in the public market, they've had to do an enormous discount. So this has been the problem with SPACs in this kind of market. What you will see is that obviously the companies I'm talking about, which have cash, which are trading below cash, they are not SPACs. They have their own management team. They do have their, some assets which may be interesting. So there could be mergers that make sense from a strategic perspective where they actually have complementary assets. But really what you're trying to do is pool resources to get access to that kind of capital. But what I would say is there will be a lot of SPACs that will not be able to consummate deals, and they'll essentially go away and their capital will be returned.